Good morning. Good morning. It's 11:24 UK time. I was going to start in 6 minutes, but I originally said I was going to start at 11, so it's all good. I'm here in UK. I'm here in the UK time. Oh, what's that? It's better. It's better. All right. Let's go straight into Bitcoin and what I said last week on Friday. So apologies. Usually I stream on Fridays. My name is Amir. I'm a crypto enthusiast. My channel is entertainment value only. I'm not trading at the moment, but it's I do sometimes give trading setups based on trade plans and risk to reward with invalidations and take profit targets. Not always, but sometimes. And effectively what I'm doing here is analyzing the market, looking for good places to long, good places to short, and high probability areas, and then just kind of speculating on future price action. And most of the time I'll be looking at candles and patterns just to try and identify what the market's doing. And then I'll usually always look at the order flow as well to see if there's any divergences. So this week I said I was going to kind of delete all my charts. And it's so annoying when you delete your charts because you have to redo all of them. So I think I'm going to have a little bit of an extended live stream this morning. Apologies if you're only here for 2 minutes or 10 minutes. You're just going to have to catch the stream later when I cut it and post it as a separate stream if that's what you want to do. I think it's important. The new year has begun, that we kind of clean our charts up. What we're going to do is just going to make a copy here. Call it Jan 2026. I like to copy my previous stuff. Oh. And then delete, and then restart, just because it's such a pain to do the Elliott waves again. And I've already done that, and I don't really want to spend time doing that again. Or maybe I should, I don't know. Anyway, let's just start deleting. Oh God, it's such a pain, isn't it? Elliott waves is such a pain. What's that one? Yeah, I don't want to redo the Elliott waves, but I'm going to redo everything else. And here we go. Delete. Lots of deleting. Those are the Wyckoff images. I'll keep those because I don't need to search for them again. Fib time. Let's get rid of all that. Delete. We could keep that one. We can keep these, actually, these SPs. We keep the SPs because I'll have to redo them anyway. We'll have a look at the NPOCs. Get rid of this. Oh, look at that. Wow. That's actually pretty interesting, huh? Get rid of that. We'll get rid of it anyway. I'll keep that one. Get rid of these. Excuse me. What's this one? Get rid of all of these. What these? Get rid of those. Rubbish. It's quite interesting. Could have a look at that. Look at these channels. Oh, that's an important one. You see that? That's quite important. Previous all-time highs. It just saves doing it again because I'm going to have to do it again. So there's no point redoing certain things which I'm going to redo. I can just update it and saves a bit of time. These channels are pretty good. previous range, and keep all of that. So even though effectively I've deleted, even though I'm keeping stuff, it just means I don't have to waste time creating new folders. Let me get rid of the volume here. We have a clean chart. Effectively, we have a clean chart. And we're looking at Bitcoin. I'm going to start looking at higher time frame candles. And what do we have? What do we see here? We see, so just looking at the candles, last year was a red doji, huh? With a swing failure of the highs. It's interesting because people were expecting a green year and it was red, yeah? Because here you had green, 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 and here you have green, green, red. So effectively this candle here, this red one, is mimicking this green candle. Effectively. So I do wonder if next year we go down further, just because that's pretty bearish, huh? It's a pretty bearish red doji in the highs on the yearly time frame, the 6 months, and this 6 month candle was pretty. This is a reversal pattern here. You see that this 6 month candle closed lower than the previous 6 month candle high. We had a swing failure here, and we haven't closed lower, but we're getting a reversal here on the 6 month time frame. Do you see that? So usually with these, we might go up one more time and then reject. If you can perceive the future, if you can imagine the future, you're not really expecting this to just go up and up and up and up. It's just a floating red candle, so like a big sell candle with a swing failure. It's pretty bearish. 6 monthly candle. Let's have a look at the 3 month candle. This is a bearish engulfing 3 monthly candle. Do you see that? That's a bearish engulfing. What's the volume? Increasing volume with a swing failure. It's a bearish candle, huh? This whole thing is a bearish reversal here on the 3 month time frame. So we're getting indications here of bearishness at the highs. And it doesn't necessarily mean the whole thing is bearish or suddenly everything is bearish, in the sense that if you look at the higher time frame, you know, you're still putting in higher highs and higher lows. It's just that here we've kind of reached a failure point where the price is just struggling to go up, isn't it? It's struggling. Now, what happens next? Well, it's just good to look at these higher time frame candles and analyze what they're telling us. 6 monthly bearish, 12 monthly bearish, 3 monthly bearish. Doesn't mean it can't go up. Doesn't mean the whole thing is bearish. It just means that in this time frame we're looking at something bearish. With this 12 monthly candle, you could easily go down. You can easily go up. Either put in a lower high or even do another swing failure. Go all the way back down and fall down for a bearish reversal. You could just go straight down. I don't think it's likely. I think it's more likely to go up and then to go down. Trap longs and then plummet. And then you're coming into this kind of yearly red candle, this big major order block here, this big one, this big red order block. And effectively that becomes your higher time frame buy zone, starting at around $47,000, $48,000, all the way down to the bottom of this candle, which is 15,000. That's your massive yearly order block. And what you want to see on a higher time frame in terms of candles is you want to see that order block start to get filled and hold as support effectively. If you get that behavior, then the next year we can go up and then maybe we continue type thing. And then what you want to see is bullish reversals into these higher time frame candles. On the 6 monthly time frame, look at this: 6 months up, 6 months up, 6 months up, 6 months up, 6 months up. So you have 24 24, is it 24? I don't know, 30 months of up only on Bitcoin. 30 months up only. That's the longest up only we've had, isn't it? It was even more bullish than this one, which is only 24 months. So that's 24 months up only. This is 30 months. So actually, even though we have a red yearly candle, when you go to the 6 monthly candles, you're seeing actually it was just as bullish, or even more bullish. Bitcoin went up 500% there. About 500%. It's about the same as the last bull market, except that there was no crazy alt season as there was last year. I mean, last bull market. The 3 monthly time frame. Now, the good thing about the 3 monthly time frame is that we're getting these kind of red intermediary order blocks. These red ones. You see, there's 1, 2. There's one there. We're into one now. It's at the highs, and then we've got this. So very different to this market here, where on the 3 month time frame it was just up, up, up. And naturally, when you get this kind of up, 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 you get down, down, down. When you have these red candles, they act as support, every single one. So the price doesn't just go through them easily, because that's where large orders are placed on these higher time frame order blocks. Usually where the body begins to where the body ends, all the way down to the bottom of the wick. Kind of where the body begins to the body ends. That's kind of where you get in the big orders, these massive orders, high areas of liquidity, and that's where you expect the price to stutter, to stall, to find support, and then reverse to go back up. And so, whereas before we had a straight up and straight down, no, straight up and then dead cat bounce and then down, I don't expect the same kind of behavior as the last bull market, just simply because of the way the price has ascended. It hasn't done the same thing. So as you come down, even if we go up now and we lose this, clear these orders, we're going to come down into another one right there. Yeah, and then if we lose that, then there's a big gap, isn't there, from there to there. And so you're not just going to get straight down. I don't think so. That's highly unlikely. It's more likely that we go down, fill orders, go up, come down, go up. If we're going to go down, just looking at the candles, but it is bearish. We are seeing bearish reversal. This is a bearish engulfing 3 monthly candle. This is a bearish reversal on the 6 monthly structure. Is a bearish reversal. We've taken the highs, the all-time high. It's a swing failure. And the early time frame is just a bearish doji with a swing failure. It's bearish. There's no denying what we're seeing right now in the charts. Oops. Weekly time frame. Getting a little bit of consolidation here. As I said last week, it's kind of sitting somewhere above this consolidation area here, kind of in the same area. We had the same thing here. The price came down. This was more bullish because it couldn't get in, whereas here we're clearing a liquidity. So I still think we're probably more likely than not to go up for a lower high. Just looking at what we're looking at now. Now, you could get a higher high and then depending on how we go up. If we go up really fast, then you could just reject like that, couldn't you? But I don't think we're just going to go bam. That makes no sense whatsoever. I just think that's highly unlikely. The minute we start hitting these liquidity area here, you're going to get heavy selling again. A lot of trap liquidity in these highs. A lot of people are still waiting, wondering if the bull market is over, and they will sell. And so it's more likely than not, if we do go up, that we'll get a keen rejection, for a lower high, and if we go up fast, then we'll come down fast, and if it starts to come down fast, there may not be enough liquidity because we're clearing it, aren't we? Look how far this wick went down. We're clearing the liquidity from this area. Lower low, lower high, and then straight down into this kind of next zone here. That's basically what you're looking at the moment when you're looking at the charts. And it gets really bearish because people are looking at this head and shoulders pattern. If that was to happen, it would be a really nice head and shoulders pattern with a back test off the lows, and then you're looking at a one-to-one type situation to the neckline. We're looking to come to the low of this next order block, 54, whatever. And as always, when Bitcoin drops, it really drops. So if you might be thinking, oh yeah, I'm going to come in at 55, and then suddenly you see the price all the way down at 47, and what do? You panic. You don't necessarily buy, but actually anything in these lows would be an amazing buy. Anywhere in these lows would be an amazing buy if we got that opportunity. And it would be a one-to-one. It would be kind of the full extension of a head and shoulders pattern. You wouldn't expect this head and shoulders pattern to extend beyond that. That would kind of be the end. And maybe that would be the end. Maybe that's when it starts to go up. The only caveat in that situation, let me delete these again, is a head and shoulders fake out. I talked about head and shoulders fake out in the past. You have a very bearish pattern forming here where you have this kind of head and shoulders neckline. It's not high probability. It's low probability, okay? But it's extremely bullish. This is starting to form a bearish situation. Bullish in the short term, bearish in the higher time frame, where you form a head and shoulders pattern. You have a clean neckline break, but actually there's a massive liquidity grab here, and you reclaim the neckline. Low probability, but if that happened, that would be really bullish. So you go from extreme bearishness, which is a lower low with a neckline break, but you reclaim the neckline. It'd be very different to a rejection off the neckline. Rejection, so that's the difference. A rejection off a neckline to a reclaim off a neckline. The reclaim is really bullish, and that would be like this. And a bearish one, and it doesn't have to go as high as I'm saying because it could be much lower, would be some kind of back test and then continuation to the downside. Yeah, and in that situation, you have to be patient and wait for it to happen, rather than presume that this is going to be bullish because you're bullish, or you just have to see what the charts are saying and see what the order flow is saying. So in that situation, you couldn't effectively, if you were to catch a swing failure here, people would sell into that, and then if there's a reclaim, then they could long it off a back test, off a reclaim, and that would be, otherwise it's a rejection and you're going down. Okay, so that's kind of the patterns. And even though I'm seeing higher time frame bearishness, the reality is I'm actually quite bullish. Overall, I'm bullish because look, it's bullish, isn't it? It's bullish. Overall, it's bullish. High highs, high lows, high highs, high lows, higher highs, higher time frame. We're just looking for a higher low now, aren't we? On a higher time frame. So even though we've overextended and we're exhausted, we're finding a little bit of exhaustion here. High low, high high, high. It could just keep on going forever. High high, high low, and a higher time frame. But it's a higher time frame, so you have to bear that in mind. So you have to be patient. And in the short term, I'm feeling bullish. Why? Well, because I was talking about the possibility of some kind of Wyckoff accumulation here last week. Now we haven't had the ST in phase B yet. Okay. And I think it's more likely than not we're looking at a schematic 2 without a spring. And maybe we go up to put in a lower high here without taking the highs there. Oh, no, not necessarily. I'm just looking at this and just wondering, actually. I am wondering if this ST in phase B is here and we haven't actually managed to take out these lows. Because it's taking too long, isn't it? And usually with this kind of drop from the top of the AR, you just go down, down, down. And we haven't been able to do that. And now we're kind of just slowly grinding up, which is like this. Yeah, I don't know, actually. There has to be a spring. So if we're going to get an impulsive move to the upside, it's going to be from a spring, from some kind of low, pivot low. Impulsive moves are always from the lows. And I can't really see any impulsive move here yet. It's just kind of going sideways, range bound. I am inclined to think that we bam like that. I still think that. To take out the liquidity from that low, get people really bearish, and then snap out of this. But I don't know. Anyway, that's just kind of food for thought in the meantime. Let me go to update all the levels in Bitcoin. I'll quickly run through the volume. This is the higher time frame volume. So I'm on the daily time frame at the moment. Yeah. No changes there. What else is there? Let's have a look at these volumes. Previous range volume, that's not changed. Higher range volumes. We can get rid of that. Don't need that. Overall volume, we need that. Let's have a look at the overall volume. This is on the Bybit inverse perpetuals chart. Yeah, not much changes. We've got a big area of support at around somewhere between $52,000 to $57,000. Previous all-time highs. They're important. All these channels. Yeah, we're kind of finding resistance of 91k. Probably, it's a tricky one. So the Elliott wave, 1, 2, 3, 4, 5. A, B, C. Let's forget about Elliott waves. Bull market volume. Let's have a look at the bull market volume. Interesting. So look, you see the value area of the bull market value area has gone up to there. So we're kind of trading at the moment inside the value area. A couple of new high volume node there. One there and one there. What's that one? Get rid of that. Don't need that. High range volume. Did I update that? I think I did. Okay, higher time frame levels. Let's start with the monthly level. I'll clean this up. Monthly is in purple. So what we're doing. We have a monthly level there. We have this washed monthly here. Weekly levels. We have this untapped weekly there. There's an untapped weekly there, and there's an untapped weekly there. We've hit that one. We've hit this one. We've hit this one. If this week is green, which it will be, I think, we'll have a weekly level here. Unless something drastic happens this weekend. Go to daily levels. Yep, that one was green. Oops, can't spell. Little bit of a daily reclaim here. It's washed, but it's a reclaim. See that? We have a daily up there, and that's basically it. For our levels, let's have a look at naked points of control. Have a look at the order flow now on XO charts. It's also useful looking at the order flow to see if there's any kind of divergences. Yeah, we're getting some bullish, local bullish divergence here. You see the CVD's going down. The price isn't going down. CVD's putting in lower lows. You see that? CVD's putting in low lows. The price is putting in higher lows. So we're getting some bullish absorption here. And just locally, just in the last hour and a half or so. And across the range, there was some really strong bullish divergence here. You see that? When the CVD put in a big lower low, and then the price put in a big higher low, and then I think traders already taken their profit if they took that. We are underneath the daily open and the daily VWAP. And so even though we're getting a little bit of bullish divergence, it is still bearish until we've reclaimed that in that sense. But the bullish divergence makes you think, well, we're starting to get a little bit of weekend absorption here. So could they get trapped and for the price to go down? Or I think whatever's going on right now, it looks like just normal range bound behavior. Let's have a look and see if there's any single prints first. Zoom back a bit. There you got some big ones there. What is that? That's a buying tail. Single prints. Just that one there. I think I marked it off. Let's clear this now. Let me have a look. No, I haven't marked it off. I'm going to type it in chat. And I'll transfer it to the charts. Use single prints there. Starting to get laggy, huh? All of these have been filled. Just looking at them. The big single print block there. Look at that. Let's try that. think we filled it 87,593. Yeah, we already filled that. How far does it go back? Not far enough. Oh, maybe it does. These are filled. Any lower down? No. That was the big drop in liquidation with a buying tail. Not buying tail there. Let's see if we go up here and see where there are any single prints. Filled, filled, filled. There you go, there's some more there. They haven't been filled yet. 9759 298 998. Some more there. See that? Single prints 100 206 2. Can't read it. It's tiny though. 854. Oh shit! Did I type that wrong? 206 2100. You have a big block there. You see that? That's been tapped, but it hasn't been filled. So 103 679 to 104 584. Go back even further. It's going quite high now. I don't know if this might Exocharts is going to let us go back. Let's see. How far back would it go? No, that's it. All right. Have to refresh this because it's lagged. Let's look at the daily Impox. Is that daily? Yeah. Naked daily point of control. $87760. Oh, there's a big one there. 92340. There's a big one down here. 81880. See those red lines? They're daily naked points of control. So they're kind of liquidity areas where the price often comes back to collect liquidity. 104,920. $113,900. 124,800. And 126,160. Okay. Let's look at the weekly. So this is weekly naked point of control, or naked weekly point of control. $91096. Is that right? Yeah. Oop, there's one down there. 82,000. $96374. $124,800. Go to the monthly. $91349. Any more? Oops, not loading. Refresh it again. Oh, it's not loading. It's annoying. Maybe I already have it. All right. Just have a look at the session. Anything interesting? Nothing really. It's kind of, as long as we're underneath the VWAP and the daily open, we're kind of not really bullish. All right, there we get the first bearish CVD. See that? So this is bearish because the CVD is going up. The price isn't going up. It's actually kind of going down. So we're getting a little bit bullish here, but then it's kind of flipped bearish because the CVD is actually trying to go higher. And you can see the lower highs are forming. So this is starting to form a little bit, starting to become quite bearish now. Okay, it's just leading a little bit. We're underneath the daily open, underneath the VWAP. So as long as we're underneath, it's typically bearish. And if you start forming bearish CVD, then you're starting to get sell side absorption. All right, let's go back to the main charts. Let's fill these in. Start with the single prints. I think I have a few already. Just what was that one? 968. 906 or 2. It's a bit tedious, isn't it? But that's how this is how it's done. You kind of spend time making the levels, and then you know where the liquidity is, and then you can start to look for areas of confluence to take trades. That one I've already done. Probably there. One. Nope, it's not there, it's here. 100, 206. $100,854. It's a small one there. $103,679. $104,456. 584. So these are your single prints going all the way up, which I've done before, which I didn't delete. These are gaps in the market. They act as resistance or support until filled. And then when they fill quite quickly when they do fill. Points of control. Let's start with the dailies, which I did. So we had one from before from a lower down, so I didn't go all the way back, but it's still there. This one is cleared. These are cleared now. You see that? They're all cleared. $87760. Oh wow. $92340. $81880. $104,920. I've got that. 940. 7. $113. Slightly different numbers. Doesn't matter. Oh, it's back up there, isn't it? That's fine. 24 all the way up there. Okay. The dailies are done. Let's have a look at the weeklies. 91096. to 82,000. Somewhere here. $96374. Got that. 124,800. Got that. And monthlies. 91349. This one's been cleared. Oh, we got a big strong resistance there. And we've got the one from up there. Is it cleared already? I don't know. Oh yeah, because I couldn't go back that far on the monthly. It's probably still there. All right. All right, that's your naked points of control. So we have all our data now. Let's have a look at the fibs. Fibs are very important because they act as levels of confluence. Go to the highest or the higher time frames. Let's have a look at these fibs. I'm using the log scale. Generally speaking, on Bitcoin, you don't need to use log unless you're looking at the overall range. When you're looking at it locally, you don't need to, but when you're kind of looking at an exponential move like this, you do. So log is only useful for exponential analysis, but I just keep it on log. I think some people hate it. Some people like it. Like it. Whatever. Oops. This is your full fib log. which low do you take? Do you take the COVID low or do you go even lower? Doesn't really matter, does it? Let's go to the lowest low here on this biped chart. Only because I can see that we've got a big level here. That's the 382. And we have a flip here. You see that? That's the 236. And you can see on the higher time frame this 50%. There was a little back test here. You can see here the golden pocket reacted, reclaimed, and then it exploded. I kind of like that. So this is the kind of the higher time frame fib. Let me just rename it. Actually, let me create a group here. Fibs. So I don't need to redo it. I can just have the fibs there. Bam, bam. And then we can kind of go locally. We can go from the bear market low here back to the all-time high. And bring it into there again. Any others? Well, I will do an extension here. Let's have a look at this. Wow, look, we got a rejection from this TR pocket. Look at that. So if there's a back test, then that will act as resistance. We can keep that. Let's try it from look at that. You see that? Wow. This was 618 resisted and then broke through. These fibs are really important, aren't they? You see that, don't you? Anyway, that's kind of irrelevant now. Anything else? We can go locally. I don't think I will. Just want to keep this higher time frame fibs. These are really important, the higher time frame ones, because the price always kind of the higher time frame levels always control the price. Even locally it gets really volatile, but the higher time frame really controls the movement. So you kind of have to focus on the higher time frame for areas of significant areas of confluence and liquidity. You could take fibs on every single one of these pivots. Yeah, you could do that. I'm not saying you can't. Every single one. You could say, oh, well, I want a fib from there to there for trading. Right now, look, you see that we're kind of washing this 382 level, but the next fib level is this 50% mark, which is just something. I mean, that's quite important, isn't it? You've got the 50% mark as an area of confluence from this pivot to the all-time high. Don't you see that? You get a reaction. So that's probably quite important too. Let's hide that one. Let's try this pivot here. Just like here, we're in the 236. The 382 is lowered down probably a bit too far, but then you've got this 50%, which is all the way down here, which would be a good level too. So you've got these kind of key areas, and then you've obviously got the one that I already done. And what I will do with these fibs is, rather than just, because it gets quite messy having all these lines, and so you just kind of save the ones that matter. So in this case, I think the one that matters is the 236 and the 50%. What's that one? This is just the 50 that matters probably, or on the way up, the 236 even. Again. These both matter, just in case you get a lower high or a higher high. Lower high, it could go in and reject there, or higher high could reject there, couldn't it? So both of these matter. Again, probably not all the way down to 50%, but actually all of this is relevant because it's higher time frame, and this is the highest time frame. These all matter too. So now you can see, can't you? You can see where you got big levels of confluence, and you see that somewhere between 52 and 56 is a really strong area to buy, because you've got, relatively speaking, in a small area, you've got 3 major fibs. Okay, and then you add that with your higher time frame levels. You've got these weekly levels there, not single prints. You've got these MParks. Look at that, daily MPark. Anything else? And you've got these big volume levels. Look, value area high, high volume node. Look at that. So when you kind of add it all together, and we'll put the higher range volume with these fibs. I'm going to put the single prints. You get a lot of lines. And effectively the lines are areas of liquidity. That's where the price is always searching for liquidity. That's what it does. It's looking for liquidity until it finds it, and then usually the price will reverse and it head to the next zone. And the black areas are like gaps. And when the price moves through the gaps, it moves quite fast. And it's actually where you can make the quickest amount of money when you catch it on the right side of the gap. So let's kind of zoom out to the daily time frame. This is the liquidity. And so you can see here we've got, and here you can do a local fib too. I'm not assuming we're going up. I'm just saying if we go up, you can do a local fib here. What would you do? I think probably golden pocket. That would be the main one. Where did I put those fibs? There they are. Okay. So you get a lot of lines, and at the moment, when you kind of zoom in a little bit, look at where we are. We've got a naked weekly point of control and a naked monthly point of control. We've got a fill of this single prints. You could take a very local fib here. Golden pocket. So you can kind of now start figuring out your trade plan. Huh? And I think locally, I would say possibly, even though you've got some resistance here up here, you see you've got like 2 daily levels. You've got, what is that? What do they mark it? A naked daily point of control, a daily level, and a 786. And what you're looking for is a reaction. This is kind of how you do your trade plan. You're looking to do a trade plan. And what you're looking for is a reaction. So the first one would be here. You need an entry. An entry would be a reaction. And it's based off a trigger point. In this case, it would be a swing failure. So what you're looking for is an SFP. That's really what you want to see. You want to see a swing failure to take out that high. Trap longs, because their longs will long the breakout, won't they? Then they get trapped. So effectively what you're looking for is the price to go up, trap the longs, swing failure, which means to go above this pivot and come back underneath it. That gives you an invalidation. So once you see the swing failure, you've got the pivot high is your invalidation. So then you can take the trade. So you have an invalidation with a slightly wider stop, slightly wider, just in case you get a second swing failure with a fake out and you take a short, and that's your trade. So you have a risk of, in this case, 1, and then the reward, assuming you held the position all the way down to the bottom, that would be the target, the pivot low here, then you have a risk to reward of 1 to 10. You wouldn't hold it to the bottom. You'd be looking to take profit at support, but depending how the price behaves and moves, you could go down quite fast. You could, it possibly could be this pivot low here, or the golden pocket. And obviously volume levels matter, but you see here we have got some liquidity here, this naked point of control, this weekly level, and this kind of value area low. And so in this case, that will probably be your first take profit. Why? Because the price could reject like that, could go down, find support and go up like that. It could do that. And so you're basically looking for the first area of support in a short to take profit. That will lock in your trade. That means your trade becomes immediately profitable. Then you set to break even, so you can't lose on that trade. And then you let the runner run to the next area of support. Even though, but if we are going to see a big rejection like that, it's possible that we just go down, down, and down. Yeah, like in a push down. That's kind of what you want to see. You want to see it down, down, and down, like a really quick. And the reason why is because if we are going to somehow spring there, you want it to go down fast, because that's how we're going to impulse back up. Yeah, the faster it goes, the easier it becomes to impulse in the other direction. But because you want to protect your trade, you have to take profit at the first area of support, just in case the price finds support and pings right back up. And you don't want to be you don't want to allow a winning trade to turn into a losing trade because you failed to take profit. That's greed overtaking your emotions. Yeah. Whereas you can systematically take your profit and look for the next trade. I think that's probably a swing failure there would be nice. And alternatively, so let me just put that into SFP short. Yeah. And then the other thing I'll be thinking about is if we don't get a swing failure, you hit this higher level, just put in a lower high there, and it's like a failed reclaim, isn't it? It's like a reclaim, you fail it, and then you just go down like that. It'd be harder to take that trade because you do have to wait for some kind of reclaim or failure here, and then you're looking for a back test for a rejection, and then you could short that with a small invalidation, just the local high, assuming that you got that something like that. But you have to be careful with that, because the problem with that is the minute you flip this area into support, this area, the price could easily go down, find support, and then ping right back up for a back test. Yeah, could always do that. And effectively what's happening is people are shorting, and then they actually add fuel to the fire for the up move. Because reclaiming a level, claiming a level, flipping a level into support from resistance is a sign of strength. So when you flip a level like that, that becomes a sign of strength, and actually that's a trigger to long. Does it make sense? Fails to get through, and that's a trigger to long. So it's a lot more difficult to do that, because you have to be patient. You have to wait for a setup locally, some bearishness, rejection, and then you're shorting into support, effectively an SR flip. So it becomes a lot more difficult to take that trade. It's a lot easier to take a swing failure, a clean swing failure like this, just because it's just this easy trade. It's a swing failure and it goes down quite fast and you can quickly lock in your profits. This one, you have to be a bit more patient. And if you don't find support, then you're in a really good position because you've shorted higher up and still probably aiming for the lows. And you get a much better risk to reward. You get, in this case, a 1 to 10. They're both 1 to 10s. It depends on the invalidation. Huh? So if you have a smaller invalidation, you can get a much higher risk to reward. It's always based on the amount that you risk in terms of a percentage of your portfolio. So it doesn't really matter how wide the stop is. What matters is how much of a percentage that stop will affect your portfolio. Usually it's about 0.5%. If you're more aggressive, it's going to be towards 1%. Yeah, but no more. Okay, and so let's just say hypothetically you took that trade, any one of these trades. Let's say you get stopped out. Let's say you don't get stopped out. Let's say you just take this trade, you risk 0.5% of your portfolio. You'll come down, you'll lock in profit, you've made like 2%. So you've risked 0.5%, you've made 2%. Then it goes down another whatever, probably make another 2%. It goes down again, you probably make another 2%, whatever. You can like make a 1 to 5 or 1 to 6, something like that. And so you're effectively risking half and you're probably walking away with somewhere between 4-5% as long as you're taking profit. And then because you have the initial rejection here, you can quickly lock in your profit and you can quickly turn that into a risk-free trade. So even if it does find support and ping up, you haven't lost. Yeah, so you don't get sentimental about, oh, I took the trade and didn't go down, I need to keep my short open. No, you don't care because you're aiming for low. If it doesn't go low, you don't care because you've locked it in. You've locked in your profit, so you've made a profit and you're in a risk-free trade. This type of setup would be harder. And then obviously, if that happened and you found support on an SR flip, you'll be looking for a mini. And the problem again, it's always the same. We don't know what's going to happen. So you could also reject from the highs. Something like this. It looks like it's going long, but actually it puts a low high and it does that. And you could always find yourself on the wrong side. But then the minute you fall underneath this low, market structure is bearish and you still have a short, another short, but it's not off that top pivot. Then it's like a failed SR flip. It's like a failed auction effectively. It's kind of like a failed auction off that original swing failure level, but now your invalidation is this local high. Because once you come back underneath that level, you're not expecting it to do that. Okay, so you could lose, let's just say hypothetically, you short, you lose that trade, you long, you lose that trade. So you've lost 1%, but actually you've taken this short and you've made it all back plus some. And that's kind of how trading works. I'm not saying this is going to happen. You don't know. And I think the most important thing is to realize that no one knows what's going to happen. No one has a clue, and therefore you're just planning potential longs and shorts based on areas of interest where the price reacts correctly according to what you're thinking. And if it doesn't do it, then don't take the trade. Just wait for the next trade and then move on. That's effectively how it's done. So this is, what would I call that? That would be a failed auction short or reclaim long. That's that one. That's that one. And then going back to the Wyckoff idea, these images, if you remember these images from last week, these ones. If we are looking for an ST in phase B, we're looking to take out this pivot low. We're looking for a reaction, which is taking out the SC. If that happens, I'd like that to happen because it would be easy. It would be an easy long. Maybe off a short, if we get a short rejection, go down in like 5 sharp waves. Bam, bam, bam. Okay. For a swing failure off this pivot low here, that would be really easy. It would be in a really easy long. There. You wait for the reaction, as always. Swing failure. And as you have to mark it longer. When you get the swing failure, you mark it long. You don't limit in, you mark it. You don't limit into a swing failure, you mark it long. Otherwise you won't get filled, because the price would just keep on running away from you, because traders mark it long and mark it short. They don't limit in, they mark it. They wait for the reaction. You will never get it exactly at the level unless you've got ninja fingers, and then you're looking for an impulsive move. And then based on that Wyckoff image, that one, you're looking to go all the way up, probably to the 886 based on that image, in 5 waves. Phone is ringing. Let's just say we do put a, I don't know, no one really knows what's going to happen. See, even if you did mark it long, you'd still have to take profit, because the reason why you take profit is because you're long, you'll be in a really good position, you'll be really bullish. Yeah, this is going to the moon, and then you're in trouble. Huh? It can happen. So you have to take profit. But in this situation, oops, wrong one. Which one was it? Yeah, 886 all the way up to wherever. In 5 waves. Like that. For a lower high. Something like that. Like a 1 to 10. If that is the ST in phase B. And the reason why you take profit is because you can always compound the profit on the pullbacks. Yeah. So if you do get, like, look, if you do get 5 waves like that, every time it pulls back, you can compound the profit. You take your profit and you can compound it. Take the profit, compound it, take the profit, and then you can compound it. Yeah. And let's just say you get a really good position. You're still in position because you haven't closed your trade. And if you do get an ST in phase B, that pivot won't be taken again, but you've taken profit. Then you can compound it, wait for that to play out. And then sign of strength, and then going up to put in a lower high. Isn't it? So if you do take a swing failure here, that you want to have that position open, but you do want to take profit, but then you can compound it on the pullbacks, don't you? All right. So let's just do that. That's going to be, oh, smoke alarm is testing itself. That's an SFP ST in phase B. Long. All right. So that's kind of some local analysis. Now what I'm going to do is look at something slightly higher time frame. All right. And again, what I'm thinking is the same as what I was thinking last week. I'm thinking that we're forming higher time frame head and shoulders. And we're looking for a right shoulder. Maybe a smaller one, maybe not as big. Just because I think it's going to get really bearish once we start hitting this area. Okay. And maybe not like I mean, if we are doing a little bit of a Wyckoff accumulation, the thing about Wyckoff accumulation is if we do go down and go up, then we kind of go down a little bit, then everyone's going to get really bullish. And because everyone suddenly gets bullish because they're thinking, okay, this is it, this is the moon, it could always go up and take the high. Yeah. No one knows. No one really knows what's going to happen. Yeah. I think it's not, it would have to be something extremely fundamental for that to happen. It's more likely that we just have a little Wyckoff here and then put in a lower high. It's more higher probability of that. So until something changes, how would we know? I mean, what's the sign of strength in this situation? Well, look, I've got the higher range volume there, and it's a tricky one, but really what you want to do off this value area for higher prices is we want to flip this value area in the whole lot into support. Okay, so whatever happens here, we're kind of range bound, but I think what needs to happen is we need to flip this area into support. So then this whole zone becomes a support zone. The value area high flips into support. And it's tricky because then you're longing higher, much higher up, 114. But that's, for me, that's more bullish. It'd be a lot easier to long that with a view to break out into price discovery again than to try and long it like this, like here, coming into resistance. Yeah, just because you want to see strength, you want to see support, you want to see this value area flipped into support. So you were longing much higher up, but at least then you're longing support after a big area has flipped into support, rather than just assuming it's going up and then just because we take out the high, oh, high, long, and actually what happens is it now starts to crash and you can't see the value area flip into support. That becomes a trigger that becomes a trigger to sell and short rather than to long. Yeah, because then you're looking for a failed auction, another failed auction with a massive liquidity run of the highs. Okay, so actually if you're going to long, it's here, but then you're longing to go back up to the value area high, these high volume nodes, and that's when you can kind of get your levels back up, the single prints, the higher time frame levels, these fib levels. Where are they? Where did I put them? Fibs, let me just bring them there. There you go. Lots of lines. And you're just trying to imagine a future. Now, last week I had this trend line, didn't I? So let me bring the trend line back. That one. That's the outer trend line. Look at it. We're coming into it now. So we're into resistance, aren't we? We're into this trend line. Look, we haven't broken it yet. We're finding resistance here. There's resistance, and I wouldn't mind if we see a kind of like a swing failure and down, maybe tomorrow. That has to break. You want to play it safe. Wait for that trend line to for a clean break, back test, and I mean, ideally we want to reject, go down, then break, back test, and then long. That at least you've broken that trend line. You know that we're not going to keep on going down. And then you are looking for a swing failure. I mean, you could always get a higher low. No one knows that even though you're expecting ST and phase B for a lower low, for a swing failure, it's always possible that there's so much absorption, there's so many longs, that it just holds a higher low. It's always possible, even though you're expecting lower, just because of the Wyckoff accumulation, it's always possible that you just put in a higher low. And the safety net there is a break, back test, and then continuation, resumption of this breakout type thing. That's where we are. So this is kind of the outer trend line. I'm going to call it the outer trend line. Can I rename it? I think I can. Outer trend line. How does that look with that one? Who knows? And then we're looking for shorts, aren't we? So at the moment, we haven't put in a lower pivot. I'm just basing the fibs off this current pivot, this pivot low that we've put in there. You can see the liquidity. You've got single prints here. These single prints will fill very fast. They're kind of on their own. There's no real confluence here. You'd have to flip this point of control and this naked weekly point of control. So there is kind of a level of take profit there. But if you flip that, you're going up really fast. You flip that area, you can go up really quickly. If that starts to happen, you're probably expecting the price to zap through those single prints really fast. Yeah, just long, just to fill those single prints. And then you're coming into resistance, big resistance. And there's two main areas of resistance. This area is a little bit messy because it's kind of a wide area, lots of levels. And then you're coming into much stronger area here. See that? Where all those lines of confluence are. I don't know if I would expect the price to easily smash through that and to go up to fill the top. I'm not really expecting that. It's kind of unlikely. Okay, it's an extremely low probability. I wouldn't be expecting that. Look at all this confluence here. You've got the value area high, you've got this monthly level, you've got a naked daily point of control, and then slightly above it you've got a daily level, a weekly level, and then you've got this 786. You've got a really strong area of resistance here. It's above this high volume node, so you have to break through that. So you are potentially shorting into support, but it's a strong resistance area. It wouldn't necessarily be easy for the price to break through, but it doesn't mean you're just going to get a quick rejection and that's it. You wouldn't necessarily do this, just simply because to get past this level is going to take a little bit of time. And so let's just say hypothetically, let me just get rid of these again. Let's just say hypothetically we do manage to smash up, somehow get through this level, there you're into big resistance, you can't get through, and then here it's not just going to go straight down now, is it? Because it's taken some time to get through these levels. And so in the same way it took the time to get through, you kind of has to take some time to get through again, and then you're back into whatever, you're back into quick moves. Yeah, and so it becomes, it's not going to be straightforward. That's what I'm saying. Everyone's going to be bullish, long, and then actually the price just slowly descends. People think, oh, this is the consolidation, this is the wedge, long for the moon, and then slap crash. Yeah, there's just not enough liquidity. It's kind of how you expect the price to move. People get it. It would be bullish to reclaim this golden pocket, and the thing about Bitcoin is it always overdoes. Like if it goes short, it always sells more. If you expect, like if I'm expecting the golden pocket, yeah, golden pocket, I'm just going to short that. The chances are it's going to go through. Yeah. And then you can say, oh, well, I'm just going to short this high volume node in the monthly. Well, maybe it's just going to go through. So the higher the better. And probably the most confluence here is that 786. It's quite high up, isn't it? It's like 114. Everyone's going to be super bullish, huh? If we get up to that level. But that's kind of where you want to short, sorry. Let's have a look at this this volume area here. Yeah. And the thing about that, let me just kind of expand it. Let me just go to that one there. Let's just take this whole lot. It might not get up there, and that's the thing. It depends on how, because you have this previous range point of control here. You can see it clearly. We may just actually just kind of get above this, find some resistance there, and that might be it. And that actually throws people off because, yes, we're waiting for this amazing confluence here, but it may not come. So you have to be prepared for that, because actually it might come up to this previous range. It could always reject off the range, but I think it's more likely than not to get back into the range, get everyone bullish, but actually reject off the point of control and then lose the range. And then when you've lost the range, the previous range, then you've also lost the golden pocket. You've like a reclaim of the golden pocket, you lose the golden pocket, and then down. And so the safest place, the safest way is to let the price action play out, wait for a reclaim and a loss, reclaim the value area, and then lose the value area, the previous range value area. Once you've lost it, you're not expecting the price to just zip back up like that, and then you're looking for some kind of short like that. So you've kind of lost the golden pocket, you've lost the value area after you've claimed it. That would be a swing, like a swing short, basically around 105, 106. And then where you're aiming for is all the way down to 53, 52k, something like that. And then if it's offered to you, then you could easily just short that rejection. That would be better, but bam, because you got quite high confluence there. But I mean, it may not come, and that's the thing. It may not come. So you just prepare it. And you have to wait for the reaction. You have to wait for the price to show you that this is an area of resistance. And it'll be really bullish. If that happened, it'd be really bullish. Like, it'd be like the market is like, yes, we're going to the moon. Moon time. We're going to 200k. Everyone is longing. Long. This is it. This is the breakout. We're going to high heavens. It becomes really scary to short when you're scared to short, but it's in the right area of interest and you see a little reaction. That's the area to short. That's a short, not a long. So everyone is longing, that's when you short. With a slightly wider invalidation. All the way down. Potentially a 1 to 16 trade. If that works out. Or if not, you just wait for the sign of strength, wait for the market to get bullish, then wait for the loss, and then wait for the back test, and then you got like a 1 to 12, 1 to 11, like that. Effectively, that's what I'm thinking for a lower high. Then it gets really bearish, because everyone's looking at this gigantic inverse head and shoulders. So we're looking at swing short, lower high. Okay. And now let's just kind of have a look at the higher time frame for a swing long. Now, I've been contemplating two possible scenarios, right? And I've been talking about this. I've been talking about a massive head and shoulders pattern. That's your neckline. And actually the neckline will probably be, if we do take out this low, the neckline is going to be a little bit lower. Let's just kind of see what that looks like. Sorry. I'll do this channel. Let's just say hypothetically it's a bit lower because we take out this pivot low. We can line it up to this pivot here. Look, there. That one. Who knows, really? Let me just try and line it up to one of these pivots so it kind of, maybe it makes a little bit more sense than just randomness. It's this pivot here. Nope. Which one would I do? So I think that's the neckline pivot. We want to take out that pivot low. Is there anything here? Maybe that one though. Who knows? Maybe. Yeah, maybe that. Who knows? Guesstimation. Again, the assumption is that we do take out this low. I don't know. Take out the low, but you're putting in like a kind of like on the bottom of this channel. And then you see that you got this kind of midpoint here that could also act as resistance. So even though you got this swing short there, look, you see that? Who knows? You could always, if it's really bearish, you could quite easily do that for a really bearish small right shoulder. Who knows? No one knows, yeah? But when you're shorting, it's better to short as high as possible into areas of confluence. You just, whatever, rejection. You've got this big head and shoulders pattern now. Let's do it so the timings are a little bit, make more sense. I don't know. Whatever. And in this situation, you do want big moves down. Then you want an accumulation, whatever. And why this area? Well, look, you're coming to back test this value area high. You've got this high volume node. And what you've got is these fibs, these big fibs, somewhere between 52 and 56. So it's like 3 big fibs, which I marked out. You've got these volume levels. Look, you've got this big weekly level here, the 54K. You'll go through these daily levels potentially, but come into this big weekly level. You've got this naked points of control. Where is it? Slightly higher, but you've got this other one, naked daily point. This is a really strong area, 54, 54, 55. And anything else? People are really bearish because you lose the all-time high. That's kind of what you want. But look at this bull market channel. So this is interesting because I've just kind of squiggled this out. I had this long-term, this previous bull market channel marked out. My time period head and shoulders break down like that. And it's effectively what we've got this channel. We've got lots of channels here. Let me hide the ones that don't matter. So this is what you've got, right? You've got this channel from the previous bull market, these two highs and this, look at that. We know that's a good channel because look, we back tested the bottom here. And look, that's another area of confluence there in that area. Look, to go up to the top of the channel for a short there, which is kind of what I was imagining. See that? To the top of that channel. There's another added confluence there for a lower high. And these are like a cup. This is like a big washout. And then this is like a reclaim. So this is quite bullish to get this, find support, but this whole thing becomes a failed auction. This whole thing becomes a failed auction above this channel. So if you do go up, you're not really expecting the price to get through again. Huh? You're expecting for a nice liquidity run, but nice clean back test in the channel and then down. This pivot low will line up with there, which would be midpoint. So it's possible to come down there and have a little bounce, but then like something like that. Not necessarily like that. Okay, but this is the caveat. There's caveats. Okay, so you have to kind of pay attention to caveats. And this is good area because of all the confluence which I'm kind of mentioned. And then look at it. You're buying the bottom of this rising channel, aren't you? Look, you know it's support. You've got strong confluence. You've got this value area. And when you get your higher time frame levels, you've got that weekly level, that big weekly level. You've got these naked points of control. See that here? And then you've got the fibs. Those big fibs. Yeah. So when you look at that, you're thinking to yourself, wow, this is actually a really good area to long. If we get this. And then the other thing is, on the back of this head and shoulders pattern, you know, you've got a one-to-one move, haven't you? Look at that breakout. That's it. Head and shoulders, one-to-one. That's it. That's the move. It's exhausted now, and you're coming into strong areas of support. That's a big accumulation area right there. I don't think I'm not expecting this. That would make no sense whatsoever. Right? I'm expecting more like this and then up. And then maybe that's it. Maybe we can start going back up again. Maybe that's the bottom of the bear market. This whole thing is a bear market. Lower high, lower low, lower high. We're in a bear market, aren't we? A little bit of a bear market now. And so we're expecting a lower high, and then that's the higher probability, and then break down to come down to this area 50 for a higher low here, potentially, not to take out that pivot low. And what's interesting about that pivot low is you have got an SR flip, a higher time frame horizontal SR flip here. There. We may go down to tap it. It's always possible. But and take the liquidity, but that's a big, I mean, if you go down to 48k, wow, that's a gift. 48k, that's a gift. That would be like, what the hell just happened? People are selling Bitcoin at 48k. That would be buy, 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 not sell, 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 sell. There'd be extreme fear, but that would be like, wow, it'd be a gift. And that would be crazy bearish, and so it'd be good to buy. But if you don't get that and you just get an accumulation zone, then actually this is the area. Okay, so I'm not really looking for trades. I'll be looking for accumulation. The trade would be trade the range and wait for the local setups to go up, rather than, you're not expecting it to just do this. You're not expecting this. So therefore you're not like taking a long and then it'll be a range. You'll form a range, and then you'll get a bottoming pattern of sorts, and then you get lots of fake outs, and then you're looking for a break up. That's what you're looking for, assuming this holds, because as always it's possible to do that. It's always possible. Yeah, who knows? No one knows. Well, that's the area. That's the area. If you see that it's starting to hold the support, you start seeing some crazy bullish divergences. The timings are right. It's at the bottom of this channel. You're not really expecting it to come to the bottom of the channel and then just break down. You'll be looking for a pullback, and then maybe then it'll work its way up. Maybe it'll start filling these gaps here, whatever. And then maybe we can kind of somehow squeeze to smash up. Just for a higher low here off this massive fib level. Bottom of the channel, lots of confluence here. That's kind of what I'm thinking. I'm not really thinking continuation to the downside unless something crazy happens, but effectively that's your area. And then you're targeting for short all-time highs, 1 to 10. Now maybe if you started accumulating Bitcoin at 50k, you'd probably be holding for, who knows, 200, whatever, for the next bull market. And then you are looking at some kind of crazy higher time frame breakout. It could just do that then, couldn't it? It's possible, just like gold did once upon a time. Anyway, food for thought. Who knows? It's just higher time frame speculation. High time frame swing long at 54k area. Mark that off. And then the other thing I was kind of thinking about was this, and I just want to kind of contemplate this idea. Who knows? No one knows that, so I'm not like saying it's going to happen. I have no idea. But I've talked about this before. You don't know if it's going to happen until it happens. If it happens, you have to be ready for it. Yeah, and that's why you're thinking about it now. Because the reality is, you could always come into this SR flip here, because there is a massive SR flip in play here. It's a horizontal SR flip. These horizontal SR flips are really powerful. Yeah, we've tested it once. We know this is a big SR flip. We know. Okay. Just mark it. Oh, there you go. SR flip. So we know this is a big SR flip just because you can see, look, 1, 2, that's an SR flip. Now, the next time we hit that, you can long that for a swing long. Yeah. And the interesting thing is, because people are looking at this higher time frame head and shoulders, potentially. See that? Right. And the neckline that they're looking at is whatever pivot we put here. Who knows about this pivot? At the moment, it doesn't look like it's going down, but maybe it does. Who knows? Maybe this is the pivot. Maybe the pivot is here. Who knows? But whatever the pivot is, you've got this neckline, don't you? Look. Some kind of neckline. Whatever. I can't draw, but let's just say there's a neckline like that. Let's just say we don't go down or we do go down. Whatever happens here, we create this right shoulder. It's really ugly, bearish right shoulder. Everyone's bullish. The price rejects. Then you get crazy selling because now everyone's like, this head and shoulders pattern is staring in their face and people are like, get out. Sell your crypto out of the markets because you're not messing. You shouldn't be messing around with a head and shoulders pattern on this kind of grand scale. Yeah, it's so unlikely that it's just whatever happens. It's just looks. It doesn't work like that. It's not likely. It's like extremely low probability for this to just now suddenly just go up and up and up like that. And if it did, you'd have to. The trade is that. Big V-shaped recovery, back test of the neck. That would be the next SR flip, and just to get back in on a back test. And you've just seen that happen, and you're looking to get back in. Whatever happens, that would be the trade, rather than pretending that this is just going to go to the moon. It might. No one knows. That's the thing. No one knows what's going to happen. So you can't just jump in. You just have to be patient. And if it happens, it happens. It's not really what you're expecting, so you can't really plan for that and make preparations. And then, so if you do get a lower high and people are shorting, you fail to reclaim this value area, rejection. You lose the back test of the golden pocket. Shorts pile in. Now you're back at the neckline again, really bearish, lower high, bearish market structure. Everyone is shorting. But usually people short too late or sell too late, don't they? They're not really shorting where they should short here, or sell where they should sell. They go, oh shit, the price is now dropping. I could have sold at 110, 113, whatever. Oh, that's 82, 83. Let me just sell here. Let me short here now because this is clearly breaking down. And they may be right. But then the price can always... You could always have a massive swing failure of this pivot, big liquidation, bam, swing failure, and all you get is a second test, another back test of this massive higher time frame SR flip. Yeah. And you just got to be careful because it's always possible to just go back up, test the neckline for continuation. Yeah. And so while it could be a good place to long and take profit because you're still expecting the price to continue to go down because you are still looking at a bearish pattern. So it's not really a swing long area. It's more of a kind of like you could take the long and take profit. And actually it'd be better to short a lower high for continuation, but you are coming to a higher time frame SR flip. That's the point. And if you do get that kind of price action, you could have a lot of big orders somewhere in the 70k range, 70, 73, 71, 70k, which just absorbs the selling en masse, like a massive big absorption. And so whoever it is out there, big whales, whatever, they don't care about Bitcoin at 52k. They're not expecting it. They just want to buy at 72k. They absorb all of the selling, and the price can't get down. And then what you get is a reclaim. That's what you're waiting for. Yeah. And the reclaim would be effectively getting back into this neckline. So you have this clean neckline break. I'm not saying this is high probability. It's just, you just got to be aware of it. You have a clean neckline break and you have a reclaim of the neckline. Yeah. It looks bearish because you're thinking to yourself, okay, hold on. Oh yeah, another outer trend line. This is bearish. But what you've actually done is you reclaimed the neckline. Okay. And when you have a head and shoulders pattern with a neckline break, coming to this massive horizontal SR flip, which holds as support, with bullish divergences here, and then the price comes back into the neckline of you've invalidated this head and shoulders. This head and shoulders pattern would be invalidated, and it'd be a massive bearish pattern, massively invalidated. That becomes ultra bullish. So a bearish pattern which is invalidated is actually a bullish pattern. So you can have a bullish pattern like an inverse head and shoulders, which is just bullish, but you also have to think of an invalidated head and shoulders pattern as like an inverse head and shoulders, bullish, ultra bullish. It's just a different way of looking at it. An invalidated head and shoulders pattern is bullish. To invalidate it, you're coming back into the neckline like that, because you are coming into a major horizontal SR flip. Everyone is looking for lower, but the price, that was the entry, this pivot low here. It comes back up, back into the neckline, and guess what happens? And so in that situation, you're waiting for that to happen. You wait for the neckline to reclaim. You wouldn't even mess around with longing here. You could take that swing failure, but you wouldn't mess about with longing here. You could speculatively long, just in case, but it could always just continue and just go down, so you could lose. But reality is that would be a major long signal to reclaim the neckline of a big higher time frame head and shoulders pattern, and then you're looking for a breakout to the upside. Everyone is looking at this and thinking, oh yeah, this is bearish because we still have this head and shoulders pattern. It's got this outer trend line. It's a lower high, but what actually ends up happening is you break up. So you get people shorting because they're still thinking, oh, this is a really bearish pattern. This is an amazing short. But actually, because you've reclaimed the neckline of a broken neckline of the head and shoulders pattern, it's actually bullish. It's the opposite. And then you get this crazy ping out, and it changes everything. And I'm not saying it's going to happen. I'm just saying if it happens, you'll see it here, rather than you can't wait. You can't pretend it's going to happen. No one knows. But if it does happen, then you know what's coming. All right. And as always, it's not 100%. Nothing's ever 100%. So if for some reason you lose the neckline like that, then again, it goes back to bearish. The neckline becomes the line in the sand. Yeah. So it becomes really quite easy to long or short if you start seeing that. Because if you reclaim it, you could long, and if you lose it again, you could just easily short. And it just gives you the ability to know what's coming or trade what's coming, right? So if the market is in sync and there isn't enough liquidity here, you don't get this kind of price action, then breakdown head and shoulders plays out, and people are going, oh damn, I was looking at the head and shoulders, why didn't I trade it? Why was I so bullish? Because it just now the price of Bitcoin is at 52k or 50k. Why didn't I see it? And then they start shorting down here, thinking this is really bearish. Surely Bitcoin is now going down to fill. They'll be going, maybe Bitcoin now is going to go and down, fill these gaps. I'm just going to buy Bitcoin at 30k. But no, actually 50, 54k is probably the right area to long, because you've already moved. But if you do get this crazy price action where the price reclaims, you're going, oh damn, I could have bought Bitcoin at 69k. Why didn't I do it? Oh, it's back at 97. It's a good place to short. But actually, that's kind of where you should be looking to long. You have to reverse your mind, because you have to kind of go in the opposite direction of most people at the right areas. All right, so that's kind of Bitcoin. I'm going to mark this out again. So higher time frame, head and shoulders, bullish, fake out. All right. So I've kind of gone over everything, haven't I? And if you haven't, if you've just joined me, or you haven't kind of started from the beginning of the stream, go back to the beginning of the stream. I mark out all the levels. I go through local trades, I go through higher time frame trades. I mark out all the liquidity levels. I mark them all out. They're all up to date. Single prints, naked points of control, volume levels, the higher time frame fibs. I mark them all out. I give you my reason and logic for why. The why is really important. You have to understand why. I look at the candles. I analyze the candles on the higher time frame, the 12 monthly, the 6 monthly, the 3 monthly, the monthly, etc. And I look at some possible, it's always possible, it's never 100%. I could be wrong. You always have to go into trading with that mindset. You can't be like, this is going up, this is going down. You have to have you always have to think, I could be wrong. And that's why you have a trade plan. That's why you only risk a certain percentage, usually 0.5%. And you have a clear invalidation. You're waiting for the reaction, and then you take profit, and that's it. Move to the next trade, because you could be wrong. Yeah, that's why you don't go all in. And if you're wrong, it doesn't matter, because you lose a trade, you lose 2 trades, and hey, the next trade you get a 1 to 5 or 1 to 6, and you just make back all your losses, plus your account increases in sizes. And if you keep consistent, write it down, learn from your mistakes, make some stats of what works and what doesn't, and then eventually you've got your own kind of system that works for you, and you can just slowly accumulate value. So I've kind of gone over all of that, so let me just go over them as a quick recap. What's that parallel channel? Let me put that in there. That one, yeah. All right. So little SFP short. Let me just kind of zoom in here without bringing back the liquidity levels. Little SFP short here off these highs. That'll be nice. Aiming for the lows. This would be more of a kind of like a failed auction. And then if you flip that level, then you could potentially have a backtest breakout long. You have to wait for the price to show you what it's doing. Looking for bullish or bearish divergences on the order flow to confirm the price action. This is kind of like a Wyckoff type idea of a swing failure pattern ST in phase long B, looking to take out that low. This would be a kind of like a swing short, assuming you've longed, looking to come up all the way either to somewhere 106 or ideally higher up. The best possible place to short would be about 114. And it's also possible to claim the golden pocket, lose the golden pocket, and then if you saw that, then you can short slightly lower down for a change in market structure at around 106 again, somewhere around that. This is the higher time frame head and shoulders pattern you're looking for potentially. We'll break down all the way down to kind of where you would want to long. This one, see that? At around 50, somewhere between 50 and 54k. Like a bear market low. And this is the fake out idea. That would be a reclaim of swing failure. Yeah, you could long that, but ideally what you want to do is something like that. Wait for the reclaim and then start longing. Long the lows. Build a long position, and hopefully after the first impulse, then you're looking for a consolidation for the next big impulse, wave 3 to the next, to the breakout. All right, that's kind of what I'm thinking at the moment. That's kind of my Bitcoin analysis for 2026. I'll be analyzing Bitcoin every week, so join me on Fridays usually. My YouTube channel, please subscribe. if you like my video. I'm trying to get to 1,000 subscribers slowly but surely. Once I get to 1,000, I feel good about myself. I can maybe stream a bit more. I don't know. No, I'll probably just keep it once a week. And then that'll be much appreciated. If you like this video, please like and share it. That's Bitcoin. What else can I look at? I could look at some other things, but I don't think I will because I want to move on. Actually, let me just look at the higher time frame on ETH BTC. So this is really interesting, and I just want to kind of, let me delete all this. Yeah, I said I was going to delete all my charts, so I'm going to start deleting all this stuff. I'll keep that EW. Get rid of all the rest. Don't know what they are. Probably rubbish. Stop trend line. Rubbish. Stop price action. Rubbish. Yeah, we can get rid of all that. All right. This is a yearly time frame ETH BTC candle. I think it's really bullish. Just simply because you've gone all the way down and you've closed higher than the low. So you've got a really strong buying tail here on the 12 monthly candle. Now, I'm not saying the price can't go down, but look, whatever happens, I think for this to continue being bearish, you have to, the next year, it has to close underneath the previous year low. And so whatever happens, this is bullish. Now, I'm not saying long here. I'm just saying it's looking to be bullish, because if you close with a red candle all the way down here, then you're expecting a reversal here, and the next candle is a green candle, and you've created a reversal in the wick, which is bullish. And obviously you could always go down, find support, usually around 50% of this candle wick, but if it's more bullish than not, it'll be higher up, like 38.2%. Put another wick and then push up with a green candle, and now you're looking at a higher time frame, massive reversal here, right? So we're forming a higher time frame bullish reversal here on ETH BTC. But let's look at these other candles. This is a really bullish candle. This 6-month candle is a piercing green candle. You've closed back above this lower, this candle low. This is quite bullish. This is a piercing candle. Now, it could change quite quickly. It could turn red and then it becomes bearish. If it's green, then it's actually looking at a higher time frame reversal here. We're looking at a reversal here. Yeah, now this could easily go up and then go down and then just put another It's like a Adam and Eve pattern, isn't it? Potentially. Kind of. I don't know. You could do that. It's possible. But anyway, I'm looking at this. I'm feeling quite bullish. We're above the point of control. This is the overall. Look, that's pretty nice. Would you just long there? I mean, possibly, but it's offering support. The minute you lose it, it goes down again. So that kind of does away with the idea of an Adam and Eve pattern. There's also a V-shaped recovery in play here. And then with a V-shape, you're looking at a return to the 50 fib. The problem with that is the 50 fib would lose this point of control. So it'd be difficult to just long that at 50 fib. You'd be looking to long it at the golden pocket. And then ideally you want to get back above the 50 fib to have confirmation that this isn't going down, this is reversing. And then you're coming into the point of control again, and looking at the volume, that becomes major resistance if you lose it. So there are some problems here if you do start losing the point of control. Sometimes consolidation above support is bearish, but the trend is kind of reversed here a little bit. It's just trying to find support. So at the moment, I feel like this is quite bullish, but you could easily kind of fake out to come back down. Yeah, you could always do that, and you get this kind of, all it does is it goes up, gets everyone bullish, but it just comes up to back test the value area high, golden pocket, lose the golden pocket, and psh, down, bounce, head and shoulders pattern, and then psh, down. You could always do that, but it doesn't matter per se necessarily, because it's possible, because whatever happens, as long as you don't close next year below this level, then I think we're looking at a reversal for the year after to spring up, to smash up. Anyway, food for thought. That's just ETH BTC. Where's my Bitcoin dominance? Look at that quickly. Let me just get rid of this shit. Are they important? Probably not. Get rid of all that shit. I'll keep that higher time frame analysis just for, I don't remember what it was. Let's forget that. So Bitcoin dominance, that's a really bearish candle. It's a swing failure of the high. It's a green candle with a massive selling tail, increase in volume. It's really bearish, this yearly candle, Bitcoin dominance. And so I think we're looking at a reversal here. That's bearish too. It's like a failed auction. And that's a bearish engulfing. We've already kind of gone back up to test. So Bitcoin dominance is looking really bearish. Okay. It's just food for thought. I think if you're looking for a good place to exit altcoins, if we do get like a little alt season in the next month or two, I think it's very possible. Then really what you're looking for is on Bitcoin dominance. I think a lot of people will be looking for a back test of this neckline. Okay, but I think of the 50 fib is probably the better area, the safest area here. This pivot here. That's what I think. And you're kind of, that would be my target. Let's do the volume here as well. It could go lower, and that would be a strong area of confluence because you've got the golden pocket and the value area high. It could totally go, and you see here, according to this, the point of control, we're underneath it. So this is actually really bearish for Bitcoin dominance. And really what I'm thinking of, rather than going all the way down here, which is possible. So I'm not saying it's not possible, but where it began here, this pivot low to this pivot high, it's kind of the 6786 lining up with the 50 fib. It doesn't mean the price is just gonna, it's not a price even, this ratio isn't gonna just, I mean, it would probably go down like that, then maybe one more like that, who knows. And it won't be so slow, it'll be like fast, bam, then one more, and then it goes up again. That's kind of what I'm thinking at the moment, rather than expecting it to go down. Why do I think that? Let me just have a look at this. Yeah, there, see that? Maybe just to come back down to test this outer trend line that we've broken. See this one, and this one. So you've got this kind of big outer trend line, I wouldn't mind another test of that outer trend line. And so it'd be a little bit premature to just kind of reject there without testing it. Maybe go down a little bit lower and really test it just to find support off that. Maybe that's when we exit altcoins, get back into Bitcoin, or just get back into Tether. And that's it. Who knows? But that's kind of what I'm thinking at the moment. And obviously this could change. But looking at the higher time frame candles, as I said, let me just mark this out. Targets for this is looking bearish for Bitcoin dominance. The 6 monthly time frame bearish. It's a bearish candle. That's a bearish engulfing, and it's either we're getting continuation there. It's bearish, and this is looking bearish. So Bitcoin dominance is looking bearish. I'm not feeling it bullish at all on Bitcoin dominance. Okay, that's good news, huh? All right. It's good. We've got some people here. Thanks for joining me. So that's my Bitcoin update, Bitcoin analysis. I'm going to take this. I don't want to lose people because I can see that there's a whole bunch of people here. No one's saying anything. So you're just quietly watching in the shadows. I'm literally